Well, let's turn our attention now to the issue of sovereign debt as Portugal tries to raise another €1 billion selling debt. It will be hoping that last week's austerity budget will inspire confidence and prove that it's doing enough to rein in its deficit. It will certainly want to avoid the fate of Ireland, which had to put its credit rating on review. Well, it was put on review for a downgrade by Moody's. Nick Firoozye, who is head of interest rate strategy at Nomura, joins me now in the studio. Thank you very much indeed for coming in to talk to us today. You know, we're waiting what's going to happen in Portugal, but generally with these rather short bond sales, we're actually seeing that they are fairly oversubscribed, if anything.
Yeah, generally there's a tremendous amount of domestic demand for bills, so we tend to expect that bills go relatively well. And if there's been a small concession built in just over the past day, just some relatively there's a little bit of volatility around the budget in that the budget has been effectively agreed by the minority government, but they don't have full buy-in from the largest opposition party.
So the bills don't really give us a very good idea of some of the underlying issues, and that is the problem in places like Portugal. Right?
Absolutely. That's why, in general, we'd say that most bills, for instance, even Greek bill auctions have done particularly well during even in the midst of the crisis. They've done reasonably well. But Portugal is so far about it's a little bit more than 85% of its debt issuance done for the year as planned debt issuance. So there's still a number more issues. We expect a syndication sometime later this month of about $2 billion. So that could be a bit of a test.
Now, you mentioned Ireland briefly there, but Ireland really has been a focus, particularly last week, and we've now heard that Moody's is looking at it with a view to a downgrade. Is that likely to inflict even more pain on Ireland?
I don't see much more pain that can be inflicted on Ireland at this stage. I mean, Ireland, of course, has pulled all its auctions for the rest of the year, both bills and bonds. This leaves it in a little bit of a troubling situation when it comes next year, when, especially if there continues to be bad news surrounding Ireland and the ongoing banking rescue.
I mean, the idea was that they were trying to draw a line under it and say, look, here's the money, this is how much it's going to cost. Unfortunately, that doesn't necessarily work very well when you can't test it against the markets.
Exactly. Right? No, that's absolutely the point. Ireland, just prior to its pulling all its bond auctions, it was actually issuing towards the upper end of all its ranges. So we felt at Nomura that it was actually tapping the markets a little bit more than necessary at the highs. So it would have been possible to lower its issuance calendar going forward without necessarily stopping it altogether. They've chosen to stop it, and I think that could lead to some volatility going forward.
Right. Is that the one that you're most concerned about at the moment? Is Ireland the country that troubles Nomura most?
Ireland definitely is. I mean, you look at the ongoing problems. Of course, Portugal has some corporate problems, I guess in particular Portugal Telecom. But in terms of the banking situation, the Portuguese banks, other than their lack of access to the markets, are not really a focus of concern, much in the way that Irish banks are. There's never been a huge housing sector boom. There's never been the banks have not been significantly over-leveraged in much the same way as we've seen in Ireland or even in Spain. Right.
Now, we've got the results of that bond sale. It's sold 500 million 12-month bills. That is along the kind of estimates that you were expecting?
Well, we were expecting both, it was supposed to be 2 tenders. I think it was a 12-month and a 6-month. It was supposed to be $1 billion in total.
Right.
So this is a little bit less than anticipated. If you, knowing the rates, I guess we'd expect them to be a little bit down on the last 12-month tender that we had last time.
Right, okay. Now, there was actually 3-month bills as well that were sold, yeah.
Okay.
The other question I wanted to ask you was really about Greece and what's happening there. We've seen the budget and what they can expect from that, but it's actually going to be very difficult, as a lot of people say, to actually stimulate growth when you're making so many cuts there, right?
Right. Well, at the same time, the austerity measures have both the austerity measures and the ongoing revenue, increase in revenue streams have had their impact. And I know Moody's said that there was potentially the risk of an upgrade due to that. Now, we are relatively more positive on Greece. We think the growth will be incredibly sluggish going forward. But in terms of the fiscal side, our anticipation is that we'll be above target.
Okay. Thank you very much indeed for joining us, Nick Firoozye. Thank you.